So I recently made a video on Palantir Stock, and by now most of you watching this video are familiar with Palantir, what the company does, and what the future prospects are for this business, because it is a very popular stock here on YouTube. But what if I told you there is a very similar business out there that is publicly traded, and not only is it trading at a much cheaper valuation than Palantir, it's also growing faster year over year than Palantir is. So it's an interesting proposition. Definitely a company you want to pay close attention to if you're a Palantir investor. And we're going to discuss all of that and more in this video today. So the stock that I'm referring to is BigBear AI. And if you are a fan of Palantir's mission, fundamentals, and future, you will be interested in BigBear. And like I said, the company is trading super cheap, which is what caught my attention initially, and I'm excited to talk about this one. So now, instead of making you guys wait till the end of the video to show you a comparison between the two, I'm going to do it right up front here. I'm going to compare BigBear AI, Palantir, look at some of the main metrics that I think are important. And if you like what you see, stick around because I'll be discussing all of that in much more detail. So here you can see BigBear AI's market cap is tiny, just over $1 billion, which is 29 times smaller than Palantir's. But when we look at revenue estimates for next year, it's only about 7 times less. Further, their price to sales is more attractive, under a 5 for 2022 versus Palantir's 19. Their revenue, like I said, is also growing faster at over 50% year over year. And finally, their free cash flow is very small currently versus Palantir's, mainly because the current gross margins really separate these two businesses. Palantir has over 80% gross margins, whereas BigBear AI only has around 40%, which is expected to grow over time. But we will get into the nitty-gritty for this later in this video. So if you liked what you saw and you want to stick around, awesome. If not, thank you so much for watching. Hit the like button before you peace out here, and subscribe as well if you're brand new. But either way, now we're going to dive into more detail. So BigBear AI just started trading under the ticker symbol BBAI, and it is a company that went public via a SPAC merger with Gig Capital 4. As we know, SPACs are heavily out of favor with the market right now. Investors just want nothing to do with SPAC companies, especially companies that have completed their SPAC merger. And BigBear AI, despite being a very interesting business, falls in this category. But, if we actually take the time to understand this business, it provides us a potential multi-bagger opportunity, so you want to pay close attention here. Remember, not all SPACs are created equal. There are some good names out there that have gone public through a SPAC, and BigBear AI, in my opinion, is one of those names. So, what is BigBear AI? Well, they make this very clear. Their mission is to use data-driven decision dominance to better know your world and shape your world. They are a big data analytics company that uses AI and machine learning. And as I've mentioned many times on this channel with my bet on Splunk stock, I believe big data analytics is going to be a massive industry as more and more technology shares useful data. A few years ago, I saw that the world was shifting a lot more towards, having devices communicate with each other, with 5G technology being the main driving factor. And I figured, okay, how can we take advantage of this? And the best option at the time was taking advantage through a semiconductor play, which is why I opened a position in Nvidia a few years ago. And as you know, that has done really well for us. And while I think Nvidia's opportunity is just in its early days still, there's still so much more for this business to realize, I think big data analytics is kind of at the point where semiconductors were a few years ago, where it's relevant, it's around us, but the true power of big data and analytics with that especially is still not realized. So to take advantage of this, there are companies like Splunk, Datadog, Palantir, and BigBear AI that are positioned to really pull in data, analyze it, and make it useful. So I think there are going to be some few big players here in this space, and BigBear AI has potential to be one of them. Now, out of the names that I mentioned, Splunk, Datadog, whatever, BigBear AI and Palantir actually have a very heavy government focus, which some investors like and some investors feel is too limiting. Government itself could be a huge market, but since there's two players here trying to fight for government contracts, the perception is that both companies can't necessarily thrive from this, and I completely disagree with that. Here you can see the TAM is $72 billion for this industry, grows over $109 billion in a few years, and there's plenty of room, in my opinion, to capture some of this by both companies. Also, on the right-hand side, you can see here that they're looking at commercial expansion, and this is similar to Palantir's Foundry platform, so they are very similar peers. And you may say, hey, this company, BigBear AI, whatever, Big Dog AI, has no chance against Palantir. Palantir is going to be number one. But the reality is it actually goes much deeper than that. Both companies actually announced a partnership last month where BigBear AI will gain access to Palantir's Foundry platform, which will help the company expand their business outside government, and in return, Palantir will gain access to forecasting, course of action optimization, inflation, computer vision, NLP, and other predictive analytics that BigBear AI has under its belt. So ask yourself this question, if Palantir felt that they were a superior company, they would not waste their time partnering with a business like BigBear AI. But since they have, that should tell us that they see value in this business, there is something unique about this business, and we should be paying close attention. The press release also did state that both companies are considering working together on some joint projects, and I think that could be very exciting for both businesses and both bases of shareholders. But regardless, even if no joint partnership happens, even if there was no deal, BigBear AI has a lot going for it. This company has a plan to keep growing rapidly. First, they plan to execute on existing backlog, and they have something like $500 million in contracted backlog that they'll execute on, and they plan to pursue near-term opportunities, mainly in government. Then the goal is to expand bigly into commercial, and they're going to go after enterprises where there is a ton of value still to be realized, and not to mention the Palantir partnership will also add on to that. And finally, they plan to continue expanding from that point on and look into merger and acquisitions. Their customer strategy is very similar to Palantir. Land the customer in year zero, realize some revenue, and then in subsequent years, grow that revenue rapidly as the customer spends more and more and more with them. This should tell you something. This is a very sticky product, very similar to Palantir's, and once a business or government or whoever adopts their data analytics software, they stick with it and they keep spending more and more with it. Now, BigBear AI is confident that by 2025, they'll be able to grow revenue to over $760 million, which would be a compound annual growth rate of 40%, which is stronger than its peer Palantir. Okay, so we've looked at the growth potential for this company, the value proposition for this company, how it compares to Palantir, how it's similar to Palantir. But now let's address the elephant in the room, which is what we talked about earlier, and that was what's up with their low gross margins. So to understand this, you have to first understand that the two core revenue drivers for this company, cyber and engineering, and the other being analytics. And we can see here over time, analytics will make up a majority of their revenue, and this is very good news because their gross margin for analytics is much stronger, expected to be around 70-71% in 2025, and this is compared to around 30% expected from cyber and engineering. So the more reliance they have on analytics, the better their margins will look. Now, while these margins expand, it'll also help expand their EBITDA and free cash flow, both of which are expected to see over 60% compound annual growth rate over the next few years, with free cash flow in 2025 expected to come in at around $120 million. So revenue is supposed to be around $764 million in 2025, and free cash flow on that is expected to be around $120 million. That means that their free cash flow margin really is around 15%. So every dollar that they bring in, 15 cents of that goes directly to free cash flow. This is still much weaker than what Palantir's is. Palantir is like more than double this, but it's still a very strong position to be in for a software-based business. So now when reading through their presentation, because this company went through a SPAC merger to go public, they spent a lot of time comparing themselves to peers to try to sell to investors why they're better. So let's take a look at that. We can see here revenue growth in 2022 is among the higher end of their peers, with only a couple other companies like Snowflake surpassing them. We can also see gross margins are expected to rise in 2022, but but it is under the median of around 76.5%, and even by 2025, it'll still be below this. So perhaps this is something that the market doesn't really like and could discount the stock accordingly for. We can also see that Palantir here is above an 80% margin on the higher end. So while BigBear AI is expected to grow faster than Palantir, it's going to make less money than Palantir, and that's just a reality because of their margins. So I don't think that this deserves the same multiple as Palantir at like a 19, but to trade at like a 5 versus a 19, I think is a little too extreme. This should definitely be trading much higher in my opinion. Considering their track record of growth, considering their projections of high growth and positive free cash flow, I think this should be trading kind of the low to mid teens for price to sales. So BigBear AI here is kind of a mixed bag, right? It's an interesting company. It's in a sector that's going to explode. They're doing things right because they have government contracts and they're kind of following in the footsteps of Palantir, and with the partnership with Palantir, it kind of solidifies the value that this company provides. All of this should help accelerate their revenue growth over time, making this an even more attractive investment. We will see over the next few years as they kind of diversify outside of just government into commercial, how their revenue just starts accelerating. They could surpass their estimates quite significantly, but if that expansion does have hiccups, they could miss quite significantly. So there's definitely a lot of risk involved, so keep that in mind. But this expansion will open up their TAM, will open up the potential for them. And as of recording this video, guys, the stock is trading at like $7.50 per share, down 7% on the day. But if we assume this should see its multiples expand to say 10 price to sales, it should be a fairly simple multi-bagger long term. A lot of companies in this space, when it comes to data analytics and SaaS, are trading at multiples much higher than this company and are valued with their market cap much higher than this company. And because this company is only at like $1 billion market cap, I think there's huge upside ahead if they execute. For example, from their presentation, we know that the revenue estimate in 2025 is $764 million, and we assume they maintain this 4.69-ish price to sales ratio that they're at today. That still puts them at a $3.58 billion market cap by 2025. So even if the market's like, no, this stock does not deserve more than a 5 price to sales, it's still a multi-bagger. But if they can command something like a 10 price to sales, which is still very reasonable, that'll already put this company at like a 7x, because it'll be over a $7 billion market cap at that point, which is up from today's around $1 billion. So you can see how the potential scales here as the market sees value in this company if they keep executing. And that's why I think it makes sense to consider this as a portion of your speculative investment portfolio. But of course, not financial advice, just my thoughts. Just remember, right now, today, this stock is fairly under the radar. When public, there wasn't a whole lot of press around it. The market's seeing a lot of red. There's a lot of fear with growth stocks and valuations and all that stuff. So this is just thrown in the mix there. Investors don't care about it. And I think that is what's providing us the potential for a great return. Remember, when Palantir went public, it was talked about, but it was at like $10, $9 a share, guys. A lot of people didn't care about it. But then once it shot up to like $20 in no time, that's when everyone was like, oh my gosh, Palantir, gotta load the boat on this one. So I kind of see this as kind of getting in on the early days before that big shoot up. And hey, maybe it ends up being a failed investment, but the company has shown us that they can execute. They're working with the leader in the space, Palantir. And who knows, maybe this company actually becomes an acquisition target for another business over time. Eventually, I think the market's gonna realize, hey, wait, there's this other company that's similar to Palantir, but it's at a cheaper valuation. Why don't I just buy this instead? And that's when we could see the stock price rally quite big. Regardless though, this needs a long-term outlook. If you're gonna comment here like a few weeks, a few months from now and be like, oh my gosh, the stock is down, such a bad pick and all this kind of stuff, just remember that is not the kind of way that I invest. I look at a business and I'm like, okay, this has potential over the next 3 to 5 years, possibly more. And if they keep executing, eventually the market will realize that. So I don't care if I buy the stock today at like $7 and something cents, which I did, and then I see it go down to 6 or 5 or 4 or 3. I'll probably just buy some more, you know, as long as the fundamentals are good, the next earnings comes out, they're still good, it's on track. I have no reason to doubt the business at this point, and if things change at some point, sure, I'll reevaluate. But as of right now, I see this as a no-brainer big data analytics opportunity. So anyways, guys, hope you enjoyed this video. If you did, hit the like button, subscribe, hit the bell notification, and leave a comment down below. Let me know if this company interests you. You know, if you're a Palantir shareholder, what do you think about this business? Love to hear your thoughts, as always, in the comments down below. Anyways, thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.